Count them. Just 6 trading days left in 2021, and boy, what a year it's been for the market. The S&P is up roughly 25%, and with 2022 fast approaching, our next guest says, well, he's got 3 names that he says will ring in the new year with some gains and a bang. It's time to go off the charts with Chris Verrone over at Strategas. Chris, I'd like to know, I'm very curious, with bated breath, what are you watching?
Well, Dom, great to see you. Merry Christmas. A couple of things I want to talk about today. First, we'll just start with the broader setup here. And, we're in this pretty sharp rally over the last several days for the S&P. Put this in context of sentiment. If you look at some of the retail sentiment surveys, I'm showing you the AAII retail survey here. People are nervous. People got uncomfortable. I think this is a sentiment-driven rally, whether it was Fed or inflation or virus. You actually saw one of the highest bearish readings in this survey over the last several weeks. You tend to rally out of that condition. And if we go to the next chart, the big question I have for 22 before we get to some of these picks is, what does the credit environment look like in 22? For the last 20 months, this market has been characterized by very, very benign credit. High-yield CDS spreads peaked at about 340 basis points in early December. I don't want to see spreads widen beyond that next year. So that'll be a trigger for us. We'll watch that. In terms of names that I like into next year, we'll start in the basic material space. We like ALCOA. Our suspicion here is that the dollar is starting to top, and I think some of these basic material bellwethers are really in a good spot to resume his leadership. He had a 25% correction in ALCOA this fall. It's responded emphatically from that. That's how stocks in uptrends respond. We like that. We think that goes on and continues to really offer leadership next year. Second, we want to talk about one of the great big bases in this market, and that's CISCO. Obviously been very strong recently, but when you take a step back and look at the 20-year chart or the 30-year chart of CISCO, you have just broken out of about a 20-year range. The old highs on CISCO are near 80. That's from 2000. We think ultimately that's where that one is going. And kind of sticking with the theme of really big bases, names that have been largely dead money for a decade or two, Pfizer comes to mind. Now, it has momentum recently. The stock is up a lot recently. I would look to buy any weakness here. This is another name coming out of a 20-year range. I find it curious, as Pfizer works, Moderna actually seems to be topping here. So the market might be sending us a message there. And then lastly, on the other side, so we had 3 longs, and then I want to finish with the name that makes us uncomfortable here, and it's one of the largest names in the market. It's Amazon. And I'm just struck by the fact that we've been in this 18, 20, 21-month environment where consumer discretionary has been so strong, and Amazon hasn't made anyone any money. There's 59 analysts who cover the stock. All 59 of them have a buy on it. So it's a consensus long that isn't working. That troubles us here. So we'll look to the longs, basic materials like ALCOA, CISCO in tech, Pfizer in healthcare. Be skeptical of Amazon.
Chris, pretty unbelievable call on Amazon. I'll just push back because, first of all, I happen to agree with it, but the pushback is we saw sideways action like that back in 2018 all the way into late 2019 before the stock took the next leg higher. Some would suggest we have a similar pattern now. We're just going sideways before the next breakout. Is that a possibility? I know you've taken that into consideration.
Of course we have, and I want to offer a distinction. And I think, Guy, what's really important here, in 2018, when Amazon was moving sideways, it was actually outperforming within discretionary. So by going sideways, it was outperforming in a sector that was already in decline. Remember, discretionary peaked about 2 years before COVID. So the sector was weakening. Amazon, by a function of going sideways, was leadership. That's obviously not the case here. So our concern is really on a relative side for Amazon. 18, 19, 20 months here in this fantastic consumer environment, and Amazon hasn't worked. That troubles us because it's a relative underperformer. It's made new relative price lows this week. Not a great setup.
All right. Thanks very much, Chris Verrone, with those setups there. ALCOA and Pfizer and CISCO Systems. All right, folks, let's trade around this. Let's turn to you, first of all, BK, Brian Kelly. Are any of those compelling for you? These are some old world names that we don't talk about very often, but we should. They're mega cap companies.
Right. No, absolutely. So CISCO is the one that I like the most. And not only does it's breaking out, but it's got a great dividend. And if you think about what Chris said there, If the dollar is topping, that implies that rates have probably gone as high as they're going to go, maybe a little bit higher, but that also means the economy might be slowing, right? And in the slowing economy, if rates are going down, I want something that's going to pay me a nice dividend here, and that the dividend isn't at risk. So now I've got a breakout with a slowing economy, and then add in maybe you get some stimulus coming on in the rest of the year. So I like that. I think the Amazon call is really interesting because if you think about it, is Amazon ever going to have a period like they've had where everybody's locked at home, you have to use Amazon, and all your competitors are shut down? I don't think it gets any better than that for Amazon, so I would be taking profits in that.
All right, Steve Grasso, I'll turn to you here. The Amazon call obviously getting some attention here. I'm wondering about CISCO. I mean, I remember the days of CISCO back in 99, 2000. Is this one of those stocks, like maybe Intel is next, Cisco and Intel? Do they finally reclaim those dot-com era highs?
So, yeah, when I look at it, it's the same type of thing. When I look at ALCOA, you're butting up against long-term resistance, 2018 resistance to be specific. When you look at Pfizer, I've been long that name forever, and that one is just a rocket ship, but I can't say buy that now. CISCO, for me, would be the only one that I look at a chart and I say, you know what, I could buy into that chart now, even though it's up 37% year to date. It just broke out, which means that there will be some follow through. That would be my safest bet.